Hey guys, this is Market Update. In this video, I want to try and explain to you what's going to be happening over the next few years, in my opinion, and how I'm going to play this. If you want to make money out of Bitcoin, you want to invest in it at the right times and, take advantage of cycles with Bitcoin and crypto. I'm going to go through this right here, which is actually a new metric that's being developed and showing how Bitcoin moves. I think it's important to understand this. Then I want to go through some of the recent Fed meeting, which is a complete farce. And so I just want to explain to you how investors actually think about what's being said by the Fed, usually in terms of economic cycles, what the Fed is saying and the fundamental reality of money itself in this video. Big topic, but I'm going to condense it down. Coming to the Bitcoin price, the Fed kept interest rates where they were yesterday. However, a lot of rhetoric around it saying we're going to raise and raise and raise again towards the end of the year. But the reality is they've got one job to do, and once it's done, then they're going to flip to the other side because the economic reality of what's happening with the debt construct in the States and other Western economies, and to be honest, most economies in the world. Bitcoin basically flat on this. I think Bitcoin is going to remain somewhat flat until we get some new economic data out on GDP, inflation, and unemployment. These are the three things that are going to be driving Fed policy. My base case is really just staying around this level that we've been in for a while now, which is this 25 support, which could get broken, this 30 resistance right here. And as we've seen, we've actually not broken this 25 support for a very long time at this point. Why come down here? Maybe some weakness further, maybe some sell-offs could happen, but this is the range that we're in. We're not going to break out of it until something flips, in my opinion. So we're going to get into that right now. If you are a trader, make sure to get a deposit bonus on Bybit. Good fiat currency on ramps. I trade on here all the time. Link in description. You can get up to $30,000 as a deposit and trading bonus. Check the details via the links below. I believe the macroeconomic cycle is turning. We get these cycles in the economy. In modern history, these cycles are around every 4 years, 3 or 4 years or so. Bitcoin as a macro asset follows these cycles to the T as well. It's the Bitcoin halving and the macro cycle play into this. Now we are turning out of the downward cycle, in my opinion, and all of the backward economic data that's going to start getting a little bit weird, right? GDP growth, inflation coming down, unemployment ticking up, and everyone's going to get scared. But the reality is forward-looking assets like Bitcoin actually price in the next part of the cycle each time, which is why we got this 70% drawdown despite inflation and GDP being very high when the drawdown was taking place, because it prices in the future. We priced in a massive recession and deflation in the Bitcoin price. That's why it went down 70%. But now we're trying to actually price in the next part of the cycle, which is another recovery. So the Bitcoin price and unemployment and GDP data, they're related, but they're like a year or 18 months apart. And so that's why I don't personally think we're going to go back to the lows unless there's some absolutely massive worldwide financial crash. And then, everything's going to go down at once. And then the Fed are going to come in and print more money again, and everything's going to go up again. The reason being is that the fiat currency system cannot have deflation, which is why these cycles take place, despite what the Fed is saying. We're going to raise forever. We're going to raise more. We're going to keep it there till 2026, 27. It's just not true. They just don't tell the truth. They're manipulating our behavior now. But Bitcoin is starting to recover because we're seeing growth around the world definitely slow. In China, comparatively to what they're used to, in Europe, growth is coming off a cliff. America is going to be last in and first out with recessions or slowdowns, as it always is. Cyclicality in Bitcoin. These drawdowns, an 80-90% drawdown, the drawdowns are actually getting lower over time. As the asset matures, you can see the drawdowns are actually not as harsh as they were previously. However, after each recovery, we can get a period of time where Bitcoin kind of moves sideways for a bit. We're on the month chart here, so this is actually a decent amount of time. And maybe we get that again. The sideways move, we're not going to get a huge bull market for BTC and new all-time highs until the Fed prints money in the basis of currency again. If they don't do that ever again, which is impossible, but if they don't do that ever again, and actually the economy recovers and it does great and we have all of this growth and inflation isn't that great, then what Bitcoin will do is just follow economic growth over time and just make a slow and steady rise over time as people store more of the assets that they have and create within an economy that's growing into store of value assets over time. So there's two paths of BTC. Both of them, in my opinion, lead it to going up in value, and the timing is completely irrelevant if you're an investor. However, what you can see is you really want to be investing below this line. A 50% drawdown or more is the absolute best time to buy Bitcoin during these cycles, which always occur. At this point, we just need to completely disregard what the Fed is saying. It's just a circus. They have to have a meeting and they have to say some things, but it's just all nonsense. They're going to keep rates this high in a restrictive fashion until unemployment goes to 4 or 5%. And then they're going to start cutting, but unemployment's still going to rise up because it's a lagging indicator. That's exactly what they want. They want to loosen the jobs market. And if they can do that without causing GDP to fall negative or very, very low, great news. However, it's almost impossible, right? It's two sides of the same coin. The reason why we need to disregard what the Fed is saying now is because they are always wrong with their projections on purpose, because their actual job is to manipulate what we think right now. The 2008 forecast from the Fed had GDP at 1.8 to 2%, unemployment to 5%. The reality was minus 2.5 and a 7% unemployment rate in 2008. Now that's a huge financial crash, but they will always get projections wrong. Some institutions, same institution that brought us the no-tech bubble in 2000, subprime contained in 2007, green shoots in 2009, funds rate through neutral in 2018, transitory in 2021, are now pedaling higher for longer. It's total nonsense. They're going to be high for as long as the data gives them the cover to be high, which is what they want to cause unemployment and a massive slowdown in growth. I think they actually want to overshoot this time. The Fed, whose dot plots were showing in mid-2021 that we would end 2023 this year with a 0.625% funds rate, is now predicting we close the year at 5.625. Where did the 5% go? 2 years ago, CPI was already above 5%. The Fed was forecasting rate hikes to only 1% by the end of this year. The Fed were forecasting in their dot plot that rates would not go above 1% this year, despite inflation already being at 5% when they released this. So everything they say is complete nonsense. Do not believe any of it. It is garbage. It is complete rubbish. The reason they say these things and lie, they're literally lying. They're not stupid. They know what they're doing. They are manipulating behavior of the market, of investors, of businesses, of people. They want to manipulate our behavior. They want to prevent us from demanding higher wages to bring inflation down. They want to encourage businesses to cut back on all investment and make some people unemployed. And they don't want investors to pump the stock market because that eases financial conditions as well. That's what they're doing. And they're going to win. They're going to win. They're going to cause a huge slowdown and they're going to cause unemployment to rise. We've been in it for 12 months and they're going to go for another, usually 6 months. Last rate hike to first rate cut, usually around 6 months. So just have that in your mind. Now, it can be 4 months, it can be 10 months. It's irrelevant if you're an investor investing over investment timeframes. The economic cycle is turning for me, and that means that the monetary policy cycle is eventually going to turn. And as an investor or even as a short-term trader, you have to be ahead of the game and not looking at this absolute nonsense, which is designed to bamboozle most people. We should therefore absolutely expect economic growth to be massively slow. And that's going to come out in the data. And what I mean is GDP of under 2%, 1%, 0.8%, maybe negative a little bit. That is a rolling recession. Now, a financial crisis is different. I can't predict that, so there's no point trying to. But if a financial crisis happens, they'll come out with the bazooka. If a financial crisis, like in real estate or banking doesn't happen, it's going to be a rolling, difficult recession without any growth. And in that type of environment, Bitcoin's not really going to do major new all-time highs or just go to new highs, right? Bitcoin is a macro asset and is a mirror to the dollar essentially, and health of the fiat system. It's going to go to new all-time highs when they have to debase again. Now, I think that's guaranteed because of the debt construct. If we look here, Estimates that R squared remains at 0.5, and yet rates in 2026, when the US debt may hit 50 trillion, will be 3%. This means the blended interest on US debt will be $2 trillion. $2 trillion, double where it is now. Now, what I'm saying is the debt that the US has, and the UK and Europe and other Western nations, they cannot afford to pay it through actual economic growth. There is more debt and there is more interest than they can afford to pay. There is not enough real growth in the economy to grow out of that and pay tax to pay off the debt. And so there is only one thing that they can do, which is print money to pay it back and actually debase the currency to make the debt less valuable when they pay it back. That's what they have to do, and they need cover to do that. The cover that they have is to create a recession and make you lose your job. And then they come to you with a bargain. Do you want to remain unemployed, or do you want us to debase the currency to bring growth back and so that you have a job and that you're earning some money? And that's what the populace will accept. They accept the currency debasement and getting on that hamster wheel again just to get the job, rather than having an economy with, much higher joblessness. That's what I see. That's the only way out of this. Cause a recession, bargain with the people for more QE. That's what I see over the next, let's say, 2 to 3 years, not in the next few months. Next few months, they need to cause the recession, right? Now, in terms of Bitcoin, where should you be investing? You should be investing at the bottom of each of these cycles, in my opinion, and we can see this data right here. So what we're going to look at is, this is a new ratio, like I said, which is active realized price. Now, what this does is it takes the price of actively traded Bitcoins and it gives us what would be considered a market average price for Bitcoin over time. So it's a more representative estimate of the average cost basis for the Bitcoin market. So what do we have Bitcoin at? What does the Bitcoin market, what do investors have as their average price of Bitcoin, right? Is everyone making money, or is everyone losing money on their average price? This is in red, as you can see here. So important. And what you can see broadly is that the actual price of Bitcoin right now is actually underneath the cost basis of most investors. So most people are sitting on a small loss, maybe break even or so. Now, some will be in a big loss if they bought, at the top and haven't dollar cost average since. Some people are going to be in a massive profit, but the average cost, according to the active realized price, is around 32, 34,000 at this point. So as an investor, really there's two things to look at. The first is, where are you investing and when to buy and sell? So what we're going to look at is this red line has really two modes to it. The first is during Bitcoin bear markets, sideways. The second part is during Bitcoin bull markets, directly up in an elevator. So during a bull market and a drawdown, you can see right here that the average realized price is 600, 300, 400. That's a dollar cost averaged price. That's the realized price of the market. During that bear market, that is where you accumulate and wait. And then you wait for the debasement to occur, which it will eventually occur, and you get the elevator upwards. Then during the next bear market, sideways move in the realized price. That's the real price of Bitcoin, because that's the dollar cost averaged price. And if we're all dollar cost averaging in it, which I would assume most investors are, dollar cost average price over time, once a week, once a month, that's actually what your price of Bitcoin is. And then the elevator up with the debasement. What part of the cycle are we in now? The sideways move, the dollar cost averaging move, the accumulation move, just waiting for the elevator up again, which I believe is going to happen because of the debt construct. There's really no other way out apart from essentially creating robots that increase GDP by 20% a year. It's just not going to happen. The only way it can happen is a recession first, which gives the cover for more debasement, and you just have to wait. This part of the cycle, I just cannot care if the price of Bitcoin is 25 or 30 or 22, or if we get a recessionary scare, and it sells off and it goes down to 20. This is the part of the cycle where you accumulate and dollar cost average for the elevator up, which I believe is going to come eventually, playing out like every other cycle. I can be totally wrong, so please do your own research and make some decisions here. Also, during the next bull market, we're going to be looking for this red line at the bottom here, so the active realized price MVRV. This shows bull and bear markets. As you can see, huge accumulation, elevator up, drawdown, massive accumulation, elevator up. But the MVRV, so the spread between the realized price and the price, that is getting lower over time. And so in the next bull market, whenever that may occur, if we get currency debasement again, I would consider this going up to around 2. You can see up here, it was around a level of 5. In this bull market, it was a level of around 4.5 or 4. At this bull market, it was around 3 or 4. And so here in the next bull market, I would say that this MVRV may get to 2 or 3, somewhere like that. That may be a top for that impulse, because the impulses are getting smaller as the asset matures. We're seeing impulses getting smaller. We're also seeing drawdowns getting a little bit smaller, but I think the volatility is still there. That's just what I see. If you are a trader and you want to trade this, check out Bybit 30K deposit bonus, link in description. The crypto investor course, I updated it recently with a lot more of these updates. I'm going to update a lot of the on-chain stuff as well with some new indicators. These videos are free as well for existing users. You can see my updates here on what I think is going to happen over the next 12 to 18 months. If you want to check that out, check the link in the description. I'm James, this is Bunny's EG. Cheers for watching, and I'll see you in the next one.